Once upon a time, in a tiny little village in Italy, there lived this wise old economist by the name of Vilfredo Pareto. Do know that he gave us one of the most useful concepts in business there is, and that is the 80-20 rule. Roughly speaking, the 80-20 rule says that the 80% of the results come from 20% of the causes. Now, how do we use this in business? And more particularly, how does this apply to what we want to talk about, which is finance, accounting, keeping your books straight? So if you want to get the 80-20 on accounting, it's basically few big things. So what is the essence of accounting? So the essence of accounting, simply stated, is that we want to accurately record all transactions so that we can make purposeful decisions. We know what we're doing. We can accurately project into the future, as well as know the health of our company at any given time. Looking at the nuts and bolts, what exactly are we talking about? So it's basically three statements. It's income statement, balance sheet, and the statement of cash flows. And what are we doing to those three statements? We're either debiting or crediting something, right? And what are we debiting or crediting? We're always debiting or crediting accounts. And there's basically 5 subcategories of accounts. You can think of it this way. We're using something we have to turn it into something that the customer is going to want from us, which we're then going to exchange for cash. So it's like a cash cycle. So if you're a manufacturer, think of it this way. You're going to go out and buy raw materials. You're going to turn that into work in process, and then finished goods and inventory, and you're going to sell to your customer, who's then going to pay you. So the cash is going to come back in. So the full cycle of the cash conversion. That is what we're talking about, right? So there, the two statements come into play. The balance sheet, which is where our cash comes from, and then the income statement, which is where our sales, expenses go. Now, what ties those together, especially if we're doing accrual accounting, which you should be doing if you want to get that elite 7-8 figure valuation for your business. It's one of the easiest low-hanging fruits you can pull to get top dollar for your business. Back to the topic. The balance sheet and the income statement, what ties them together is the statement of cash flows. We have 5 basic subcategories of accounts that we're at any given time going to be debiting or crediting. You have revenue or sales, expenses, you have assets, you have liabilities, and then what's left over is the equity. Or some of these accounts belong to the balance sheet, some of them belong to the income statement. And what ties these two statements together, especially in accrual accounting, is the statement of cash flows. It lets us reconcile what's reported as profits or net income with what's actually coming in, the cash coming into the business. Reconciling these cash flows is actually how we value our business. Remember, from Finance 101, any business is worth the discounted present value of its future cash flows, by some appropriate discount rate. So again, the business gets valued based on cash flows, not on reported profits or any other number. So this is why the statement of cash flows is probably one of the most important things you can focus on. And this concept is so important that I'm going to repeat it one more time. That valuation of your business is always dependent or predicated on the cash flows, not on net income, not on reported profits. If you think of your business as a little kingdom, then who's the king and queen? The cash is king and cash flow is the queen. It is that important. And for us investing types, people who are looking to invest in a small business, what we primarily care about are free cash flows. A quick and dirty way to estimate free cash flows is to take operating cash flows and subtract out your net capital expenditures or net capex, and that will give you a really good idea of the health of the business. What you're looking for is a lag between the reported profits on the net income and when the cash shows up on the statement of cash flows. If you want some help getting your financial statements in order, especially switching from cash to accrual accounting, give us a call. We'd love to help you. Check us out on our website at patelbookkeeping.com or give us a call at 223-306-2110. Hope to hear from you soon. Okay, take care.